Hi, welcome to North Property Group's YouTube channel. Today we'll be talking about how to build your own property portfolio. A property portfolio is a collection of private properties owned by an investor for the purpose of being rented out for income. These properties can be residential, commercial, or industrial. Like with any good investment, building a property portfolio takes time, dedication, and money. They're not without their risks. However, knowing these risks, being dedicated, and knowing what to do when something goes wrong can really help. So, why should you build a property portfolio? A property portfolio can bring a lot of benefits to investors. Namely, it reduces risk, it increases stability, and it can increase income. Here are a few tips on how to build your property portfolio. Number 1, financial planning. Create a budget and stick to it carefully. Figure out exactly what you can afford before making a purchasing decision. There are actually a lot of hidden costs in investing, and a lot of investors don't actually consider these before making a purchase, and then they can end up going over budget and falling short. A lot of these hidden costs can include property and capital gains tax, maintenance fees, repair fees, letting agency fees, and more. Number 2, start small. For first-time buyers, it's important to purchase one property and get to grips with it before moving on to others. A lot of the time, investors make a mistake by purchasing multiple properties at once and then realising they can't manage it effectively. Generally, it is also considered best practice to purchase a property that is local, small, and doesn't require any repairs and maintenance. Number 3, market research. Before embarking on any new investment venture, careful and meticulous research is needed. You need to research exactly where you're going to purchase, what funding you have available to you, and many other factors. Getting second opinions from agencies, other investors, and online can be extremely beneficial in helping you understand the decision that you're about to make and your investment goals. Other key areas to research include location. When choosing your investment property, location is everything. You need to choose a property that you know renters will be attracted to. This can include making sure that your property is close to amenities, transport links, schools, universities, and more. Next, rental yields. Rental yields are a potential percentage of profit that you can get from renting your property out. These tend to differ and are dependent on a lot of factors, including location and property type. Research needs to go into particular areas to find out where you can get the best rental yield for you. And finally, risks. Property investment does give you a tangible asset, but like with most investments, it's not without risk. Risks to be considered and researched before going in include bad tenants, falling house prices, market crashes, and more. Number 4, keep it local. One of the best things that new investors can do is to purchase a property in a market that they already know, i.e. where they already live. It gives them a better understanding of the local property market, where the best yields are, and what the area is like. Find your niche, pick a property type and stick to it. This means that you can build up your experience and your knowledge base of a particular area over time. After you become more comfortable with that, it means that you have the knowledge and the skill set to be able to branch out. A good tip for potential investors is to try and get a property at a cheaper price, often lower than market price. One of the best ways to do this brings us to number 5, off-plan properties. Off-plan properties are properties that have yet not been completed. They're either still in the planning, developmental, or building stage. These properties are often sold at a lower price to investors because developers want to get them off the market as quickly as possible. And they also want to be able to secure the funds. There are a number of benefits of purchasing an off-plan property. Namely, they tend to appreciate in value while they're still being built. Generally, investors, if they're looking for a short-term sell, can purchase one of these properties and then sell them as soon as it's completed, often for a profit. One of the major benefits of purchasing an off-plan property is smaller deposits. Developers are keen to get these properties purchased as quickly as possible. So one of the ways to do this is to offer a smaller deposit, making it more accessible for investors. One of the other benefits of purchasing an off-plan property is capital growth. These properties tend to appreciate in time. For example, an investor can purchase a property in 2024. By the time it is completed in 2027, this property will have already grown in value, meaning that if the investor so wishes, they can sell it at a profit without actually ever having to rent it out. And finally, one of the other benefits is energy efficiency. As it is a new build, these properties tend to be more environmentally friendly than pre-built homes, making them more attractive to investors who are earth conscious. Number 6, diversify your portfolio. A diverse portfolio means having a collection of homes, flats, and bungalows in a range of locations. This offers stability and also ensures that if there is one thing wrong in a particular market, the rest won't be affected, ensuring that your income is not interrupted. And finally, number 7, one of the best ways that you can build your property portfolio is to hire an investment firm. These investment firms can help you locate the best property deals, help you manage your lettings, and help you manage everything else afterwards. Here at North Property Group, we're committed to finding the best property deals for you. Call us today to book your free consultation and begin your investment journey.